The United States, under the current administration, has implemented significant tariffs on various goods. These tariffs, primarily targeting steel, aluminium, and Chinese imports, have sent ripples throughout the global economy. The stated aim of these tariffs is to protect American jobs and industries. However, the ramifications extend far beyond American shores, impacting economies worldwide. These tariffs have ignited trade tensions, particularly with China, leading to retaliatory measures. This tit-for-tat tariff war has created an environment of uncertainty, making businesses and investors hesitant. The global trade system, intricately interconnected, is now grappling with the consequences. The tariffs have disrupted supply chains, increased costs for businesses, and threatened to stifle global economic growth. Emerging markets, including India, are particularly vulnerable to these shocks. While the direct trade impact on India might be limited, the indirect consequences are significant. The interconnectedness of global markets means that any disruption in one part of the world is felt elsewhere. The International Monetary Fund, IMF, has warned of the negative impact of these trade tensions on global growth. The uncertainty surrounding trade policies makes it difficult for businesses to plan for the future. This uncertainty can lead to a decline in investment and ultimately slower economic growth. The situation is fluid, and the future trajectory depends on policy decisions made by major economies, primarily the United States. The current scenario underscores the importance of dialogue and cooperation among nations to resolve trade disputes. A protracted trade war will have no winners, only casualties. The global economy thrives on open trade and investment, and any disruption to this delicate balance can have long-lasting consequences. The stock market, a barometer of economic health and investor sentiment, has reacted nervously to the ongoing trade war. The imposition of tariffs and the threat of further escalation have injected a significant degree of uncertainty into the market. This uncertainty is reflected in the volatility of stock prices, with markets experiencing sharp swings both upwards and downwards. Investors are apprehensive about the potential impact of tariffs on corporate profits and global economic growth. The technology sector, a significant driver of global growth in recent years, has been particularly affected. Tech companies, often reliant on global supply chains and cross-border trade, are vulnerable to disruptions caused by tariffs. The uncertainty surrounding trade policy makes it challenging for these companies to make long-term investment decisions. This uncertainty can translate into reduced investment in research and development, potentially stifling innovation. The current environment demands caution from investors. Diversification across different asset classes and geographies remains crucial to mitigating risk. However, the interconnectedness of global markets means that finding safe havens from the storm of trade tensions can be challenging. The situation is fluid, and investors are closely watching for any signs of de-escalation or further escalation of the trade war. The outcome of this trade dispute will have significant implications for the global economy and financial markets for years to come. The Indian stock market, represented by benchmark indices like the Sensex and Nifty, has not been immune to the global tremors caused by the US-China trade war. While India's direct trade exposure to the US is relatively limited, the indirect impacts are significant. The Indian economy, although demonstrating resilience in recent years, is still integrated into the global trade and financial system. One of the primary channels through which the trade war impacts India is through investor sentiment. Global risk aversion, triggered by trade tensions, has led to capital flight from emerging markets, including India. This capital outflow puts downward pressure on the Indian rupee, making imports more expensive and potentially fueling inflation. Despite these challenges, India possesses inherent strengths that provide a buffer against external shocks. The country has a large and growing domestic market, which can act as a counterweight to slowing global demand. The government's focus on infrastructure development and policy reforms aims to boost domestic manufacturing and attract foreign investment. India's central bank, the Reserve Bank of India, RBI, has also played a proactive role in managing the economic impact of the trade war. The RBI has adjusted monetary policy to maintain financial stability and support growth. The government and the RBI are working in tandem to navigate the economy through these turbulent times. The ongoing trade war and its impact on the global economy necessitate a coordinated policy response from major economies, including the United States, China, and India. Resolving the trade dispute through dialogue and cooperation is crucial to restoring confidence in the global trading system. Unilateral actions and retaliatory measures will only exacerbate the situation, harming all parties involved. The U.S. Federal Reserve, tasked with maintaining price stability and maximizing employment, faces a delicate balancing act. The trade war, by increasing uncertainty and potentially slowing economic growth, complicates the Fed's decision-making process. The Fed must weigh the risks of inflation against the need to support economic growth in a highly uncertain environment. The Indian government, in response to the challenges posed by the trade war, has adopted a multi-pronged approach. This approach includes measures to boost domestic demand, promote exports, and attract foreign investment. The government is also focusing on structural reforms to improve the ease of doing business and enhance India's competitiveness in the global market. The current economic landscape, characterized by trade tensions and global uncertainty, presents both challenges and opportunities for India. By leveraging its inherent strengths, pursuing prudent economic policies, and engaging in constructive dialogue with its global partners, India can navigate through these turbulent times and emerge as a beacon of resilience and growth in the global economy.